very much for arranging this thoughtful session. It was interesting to hear about the two asset classes, equities and real estate, for that matter. I think it will also help, as the topic suggests, to understand that while Omar, you talked about having a variety of different strategies within those asset classes, are we also talking about, do we have something to talk about other alternative asset classes other than real estate and equity, for that matter? Yes. Something I think it would be helpful for all of us to hear what's happening in that domain. So yes, we understand cash or money markets and commodities and all that, but I think if we could hear more from industry's perspective.
Your name and organization?
Yeah, Dr. Adnan Aziz, I'm head of Sharia at Noor Bank.
Thank you. Perhaps your name and organization in brief, and equally the question should be brief as well.
Thank you. Assalamu alaikum. Sohail Zubairi from Dubai Islamic Economy Development Center. Thank you very much, learned scholars, for enlightening us on this subject. It's sort of observation we discussed about, Islamic investments getting lower return than conventional ones. First of all, we need to bridge the gap, as you said. The other thing is that also what we need to highlight is how safe is the conventional investments compared to the Islamic ones. Is it okay to get a lower return and not to put your investment at stake, or to get a higher return and at the same time put your investment at the stake? And we have this example of the tech bubble which burst in 1998. And Dow Jones Islamic Index, the investors who invested in those stocks were saved. WorldCom, Tyco, Enron, all this. This needs to be brought up, so that the investors know that it is safer to invest in Islamic sort of way and get a little lower return rather than put the whole money at the stake. The second is about the ESG. We have the Islamic indexes. DFM has got its own, and also the Dow Jones FTSE and others, ideal rating and so on. But so far, the ESG has not come up in that. So perhaps we could expand that index to also indicate which companies out of them are ESG compliant, or maybe a separate ESG index, and maybe Dubai could take lead in that. So perhaps this is something that yesterday also we had a session at DFM on this particular subject. So I think this more and more coming up. In the importance of ESG is growing. So for that, perhaps the index providers may think of that starting from Dubai. Thank you.
Yeah, basically we have two questions. The first one, how could we look into alternative investment instrument beyond equity and fixed income to cash and the commodities and both soft and hard commodities. So this is one aspect, oil and gas in particular, for example. The second one was on the risk return. If you like, how could Sharia look into risk return? How much risk I have to take for me to earn, how much profit I should be getting back to my portfolio. And the third one on the ESG, either SDG or PRI, United Nations. What would be our voice from Sharia perspective, from index perspective, to make it more visible and tangible moving forward? So perhaps the speakers and the panelists, you can take all of them or one of them, or take nothing. It's option for everyone. Yes, Dr. Elgari.
Of course, we heard many times, and we have been hearing this since the very beginning of Islamic banking, that Islamic banking is more risky than conventional. And that, risk-return trade-off, and since we are taking more risk, you have to receive less return. This is the greatest myth in Islamic banking. Of course, anything can be riskier than anything else. That is the nature of things. But Islamic banking, Islamic products, Islamic investment need not be riskier, because it all depends on the risk and the structure of the investment, of the transaction, etc., etc. And unfortunately, this myth is supported by another erroneous understanding of the fiqh. Many people, and I heard it from some scholars, that unless you have risk, it is not halal. This is ridiculous. This is just a joke. There is nothing in Sharia that says you have to take risk. If you can eliminate risk through permissible means, this is not only allowed, it is recommended, and it is actually encouraged by Sharia. There is no need to take risk. So if an investment is riskier, of course, it has to give, supposed to give higher return than the alternative, which is less riskier. But this is in everything. It has nothing to do with Islamic investment. So it is incumbent upon all of us to work very hard to manage risk, because risk is manageable. And managing risk is nothing new in the life of people or even Muslims. So we have to manage risk, and there is no reason to have our investment higher from risk perspective than the conventional. And therefore, when they say that you have to be satisfied with the less return, because I say no, it is your problem. You are not managing my investment correctly, because you have to restructure, manage, use tools to have the same risk and give me the same return, or even higher.
Yeah.
Why not? So therefore, there is, of course, we depart from our belief and religion for asking and requiring Islamic banking, Islamic finance, Sharia permissible contracts, etc. But once they are done, they are mechanical, like anything else. You see, so you can manage them, you can restructure them, and there is nothing wrong with that. There is no requirement from Sharia point of view to have riskier investment than the alternative.
Thank you.
Thank you. If I may take the first question, the two other asset classes, or when it comes to alternatives, that is, we've been kind of trying to figure out a way to create more of them, or Sharia compliant versions of them, have been on the private equity side and the private credit side, specifically the private credit side. And what we've been finding is the biggest challenge is on the portfolio manager side, their understanding of what Sharia compliant debt instruments are that they could use in turn to be able to, give loans to effectively other companies. Are there availability of Sharia compliant loans? And if so, where do you go get them? So it's kind of a situation where the portfolio managers, which are typically working for Western institutions based either in New York, London, or other cities in the West, simply don't know what Sharia compliant instruments are, and they think of it as a hindrance. Well, I know banks XYZ can give me these kind of loans that I can in turn give to my underlying companies, but where do I get Sharia compliant investment loans, instruments? So I think that part, once we figure out a way to kind of institutionalize that part of the equation, you'll have more managers being not averse to actually using Islamic compliant, Sharia compliant loans to effectively build out their portfolio. And that, I think, has been the biggest challenge. I mean, I know firsthand from working for two different institutionals for the last few years, where the first few months of us structuring strategies has been 4 months of the 6 months project being just to try to explain to the teams what Sharia is versus what it's not. And in this environment, which unfortunately the word Sharia doesn't, from the news that you get on the daily news, they don't have the same connotation of, oh, this is for investments. They think of it from very different point of view. So I think that challenge of where do you get Sharia compliant debt instruments and how flexible are they will really change our ability as managers to be able to come out with interesting strategies as our colleagues do on the conventional side.
Thank you. And perhaps, Maya, in your answer to whatever question later on, perhaps you can relate to what Omar said about the need for the cash, Sharia compliant cash, or what do we call in our world credit fund, the fund to provide the credit, because equity-wise there are many products in the market, but credit for them to pay the salaries, to do the small renovation and buy the IP and whatnot. So this is the current need of many companies in the West in particular. Yeah.
Yeah, sure. Basically, I think what Dr. Daud was alluding to is there is a lack of cash yielding fixed income, periodically distributed type of investment instruments. You can have that through, cash placements in the banks, etc. But the return that you get is very very low. So in the conventional finance space, there is an investment instrument that is known as a credit fund, or sometimes it's called credit opportunities fund. So this is where a fund acts as if it's a bank and lend in the conventional sense to SMEs, to corporates, etc. So there is a big market for this for corporates who prefer not to go to banks basically and have a loan in their balance sheet. So what they do is they try to approach these funds, and it's actually a big market in the Europe and in the US. So what we're trying to do right now is to replicate this type of funds, because it can pay you probably high single digit or low double digit, and it can distribute quarterly. So this would be a perfect fit for the likes of pension funds, provident funds, takaful, or even insurance companies, where in this time where liquidity is tight, then you would need cash yielding kind of investment instruments. So this is in the making right now, and we hope to make it known and structure it successfully without compromising the Sharia aspects of it. And I think another question just now was in relation to ESG. So there is actually an index provider that provides ESG ratings, and these are widely used, I think, in Europe, where asset managers or even banks, they create sub-indices based on the ESG ratings of stocks in the big indices. So it's already there. I think it's not yet catching up over here. So what we can do is actually to reference this ESG rating and ESG index, and then create a sub-index of only Sharia compliant stocks. Yeah.
Thank you. I think good news from the Beijing conference. I've been following the Belt Road because I'm based in Malaysia, so we are very much affected in that massive project from Jakarta all the way to Beijing all to Europe. And the Chinese government has agreed eventually to make their projects green and sustainable, which is a big achievement for the whole world. It's not only infrastructure based, but also it's green and sustainable, and that can push our ESG and United Nations PRI and United Nations SDG as well. So this is something that we have to celebrate by putting the Sharia principle and couple with the SDG and ESG as well as PRI moving forward. I have to thank the panelists for their massive and insightful contribution. Let me invite everyone to put their hand together to thank the panelists for their